Hello, traders everywhere. It is 8 a.m. Chicago time on Tuesday, the 24th of September, 2019. This is episode number 1602. Appreciate you being here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market sentiment is mostly allocating to risk. We're seeing a little bit of a mixed outcome here. The bonds are up 17 ticks, but the U.S. indices are higher. The S&P is gapping up above yesterday's high. The Nasdaq is the leader in the indices, up 21 points this morning, or 0.27%. Crude is off 71 cents, trading at 57.92 in November. WTI down 1.23%. The reason I say it's mixed is because the bonds are actually on my leaderboard. The bond futures are the second highest commodity I'm monitoring behind the cable. The UK had some news this morning. The cable's responding favorably, and we just have kind of a weird mixed bag in here. The Euro FX futures are up, while the Bund is down. So overall, mixed to allocating to risk this morning. That's the overall sentiment. We'll take a look at the overnight session here in a minute. In terms of the overall theme for today, in terms of what's driving the market, um, the German business climate improves, but expectations fall to a 10-year low. European indices trade mostly higher, yields rise. UK Supreme Court rules against the government in prorogation case, deeming suspension was unlawful. In case you didn't know, the Prime Minister of the UK suspended Parliament, and that was seen as illegal. Decided that Parliament should return as soon as possible. There's not much else to talk about. There's no talk of trade wars or anything like that. There were a few comments about that yesterday, but overall, the markets are watching Europe. Um, so that's where we stand. Uh, as far as what we're expecting for today versus what well, let's take a look at the calendar. I mean, we did have the IFO business climate came in at 94.6 versus 94.4 in Germany. And then Case Shiller just came out for the home prices, came in a little bit softer than expected. What's ahead? We have API crude stock change coming in after the market, and there's not much else on the calendar. The calendar is quite clean and clear today in terms of scheduled events. Who knows what surprises um, are ahead of us, but the in terms of what's being scheduled, there's not much. Let's take a look at what we expected yesterday versus what we got. Yesterday, we were opening at the lower end of the range of Friday's low after the impulse down. The primary expectation was for the market to continue to do its continuation trade. This pulled back to the mid, held the mid. The expectation is that that low will likely be taken out. However, did not expect much of a push once the low is taken out. Again, this is a news-driven event here. Continuation is not likely. And then I expected the market to work its way back to 29.96 or so and hold steady for the rest of the session. The secondary scenario is responsive, back up to 3,000, and then I expected it to fall off to put on a new low and then hold sideways. What we had yesterday, these are kind of inverse of each other. We had scenario one. I'll show it to you on the 2-tick Renko because there wasn't all that much action yesterday. So here we are. This is yesterday's low, the green line on this chart. In fact, let me change the scale because volatility has dropped quite a bit, and we can pretty much reduce our overall vertical scale price scale. So this is yesterday's low. We open up right inside on the edge of the action on Friday, and then we make that low. So we make that lower low. This is what was expected. Again, scenario one, as you can see, is to open up and drop and make that lower low. That's what happened. And then the expectation is for it to push back to 95. Again, here it is, 95 right here. Follow the green line, goes to 95. So it puts in a new low, goes to 95. Okay, so that was what was expected. Goes to 95, pulls back all the way to yesterday's low. This was not expected, and it looked like it was an impulse down that's likely to get a continuation. The market went into balance, and this is where I lost interest in trading. The European closed came in right in here. We had a range extension up above the IB, the initial balance, the first hour's high. So we fulfilled the overnight stat, and then we pushed into 3,000, which was not expected. But right up to this point here, we have scenario one, and then from there on out, it's too deep into the session for me to figure out with any degree of comfort or confidence that what's going to happen. So here we are. The market overall ended up having a normal variation day with a test of the all-important millennium figure. Again, this is also the MC point of control in this area. I'll show you that in a minute. And then it backed off to VWAP and held steady, the point of control being above. And then this morning we're trading right up here, 3004, 3005. Remember, this is an important spot over the last week, and we are holding in that range. If you got here yesterday and found that it was really tough to figure out what the heck this thing wants, I'm with you in the same boat. It just seemed like there were clear opportunities one way or the other, but it ended up being really a balancing zone right in here, where it was just really tough to read. And then once it took out the IB high, still found it tough to read what it wants to do with the IB. It didn't really push through the IB enough for the IB long to be in play against the prior high and this 95.50 level, although it would have worked with a standard stop of 3.5 points. But to me, the risk reward just wasn't there. It did not have clean pullbacks, in my opinion. And overall, the profile, as you can see here, the profile is not really indicating the market found a true consensus, although we do have a little bit of kurtosis here, a little bit of kind of a peak in volume. The market's not showing that it's clear on what it wants. We ended up with a weakish high. We traded a fair amount right up here against the 3,000 as we would all expect. So there it is. We get our expiration done, and we come right back above 3,000 for those people who maybe were short puts and had to cough them up. Here we are above the 3,000 figure. Again, here's the overnight session. Here's the overnight session. Look at the overnight session. Volume pretty much normal, nothing special. There isn't all that much action in the overnight session. Biggest thing to note is the overall distribution of volume here. Very, very Gaussian. Very, very Gaussian distribution, very normal distribution. This is what we would expect to see if we were, for example, surveying 10,000 people for shoe size or something. We would see this, that most people would fall into what we would call normal or the first standard deviation. This is what sigma stands for, or capital sigma, which means sum, but this is what's the normal distribution or the value area. This is the value area. And what the value area is saying is that most of the volume for the overnight session occurred between 3003 and 3008. The other thing to notice is that look at the mid VWAP, that's this line here, the cyan line, and the point of control, which is this maroon line, are on top of each other. The overnight session tested, took off, found an excess low. This is what an excess low might look like. We open, we push. This is a drive. And then we have an excess high. This is what an excess high looks like. Immediate rejection with no volume, so we have an excess high. The market finding complete balance in the overnight session and stacking prices on top of each other. And where do they do so? They do so right on top of the 3005 area, which has been in play, as I said, over the last week and a half, 2 weeks, something like that. So this the overnight session is really blaring out that yes, we do have a gap. Yes, we're above 3,000, but we don't have any drive, or we don't have a good push in either direction. We like these prices around this 3005 area, so keep an eye on that this morning. So a lot to be said here for the overnight session. The inventory overnight's 100% long. What does that mean? That means the trading has taken place. Pretty much all of the trading has taken place above the prior day's close. So if we had nothing new to price in, then we would be stuck around the prior day's close and kind of not moving away or keeping a portion of our time above and below um, around yesterday's close. So we have 100% inventory long, overnight inventory being long in price and volume in terms of aggressors. So this morning, that's where we stand. A quick look at the order flow. You might notice that it's just again, volatility has really dropped here. The overall picture in the overnight session and yesterday's action is that volatility has been dropping quite rapidly. And overall, the market's in a kind of a balanced, settled state. I'll go over that real quick here on the composite next. But in terms of what's out there, remember 3008 had a big offer right in here yesterday. At 3008, there was a big offer sitting up here. It's gone, and it looks like the next big offer is at 3017 and a quarter. That's been steady and holding 3015 and 3010 above. Below us, we still have some play in the 3000. This looks like a bit of a kind of a hedge type play, but we don't gain too much by looking at the overnight session in terms of order flow. There's just not much there to look at. No serious collisions. There was one here at 3003. Remember, this is the value low of the overnight session. And then above there is 3008, but it just isn't. Here's a cluster of collisions at 3008. Those are the areas I'm going to be watching early on. I expect reactions in those 3000, in that 3003, 3008 early on. But overall, expect a lackluster open this morning, given that we've achieved really strong balance in the overnight session. Not very much volume, but overall, the market's very comfortable with these prices, and that's what this all means. So let's move on to our composite, just to step out of our, uh, kind of little small lens, narrow lens of what's happening. So what have we done? This is the S&P composite chart, very important chart to me. This shows the daily action, RTH only, as you can see up here. It's going from the cash open, the pit open to the pit close in Chicago time. And what we've done is we've moved from all-time highs in this balance zone. You can see the balance right here in this profile to repricing down as far as 28.22 and a quarter in the current contract, achieving this high kurtosis kind of area up at 29, 23, 24, and then just sitting sideways. You can see how boxy this profile is. I mean, the market really battled to find some sort of consensus here and couldn't accept these higher prices. And then we finally broke higher and we are up here. And then just kind of tiptoeing above and below the 2960 area. But if we zoom into what we've got up here recently, there are some really clear channels here in terms of volume. So we have this low volume node, and we have this other key low volume node right here with a point of control right at 3,000. We've traded a lot of volume at 3,000. That's the most accepted price. The price above there that's most accepted is 2016. 2016 is the next most accepted price. That is right here. And then below there, 2980 2981 is the next most accepted prices. We call those high volume nodes, micro composite high volume nodes. And overall, the market is just kind of accepting and liking this area right now between 2981 and 2980, yeah, 2981 and 3016. We're right in the middle of that at 3006 right now. So don't get too just, step out, widen your lens a little bit to understand that we are really in an area that the market is just kind of toying with and can't decide whether it wants to stay above or below. This 3005 is the microcomposite low volume node, and there's going to be an incentive to keep it above there. There's going to be an incentive to bring it down below and back to 3000, and there's likely to be a battle in between, and that's why we get this kind of balanced, undecided consensus at 3005 in the overnight session. This is really important. Until we break this area here, we're likely not to see, and of course, this is disregarding news. Until we break away from here, we're likely to see a fairly choppy trade. So just bear that in mind as you're looking at your short-term charts, and make sure you're not getting caught up in the noise. So that's where we stand. Let me widen this out a little bit. There's no sense in having such tight scales. Here we are. We are getting back above this 3000 area. We're getting back above the balance that we've had down here Friday and yesterday. And we are opening in a gap up this morning. So we are right in here. See this 3008 right here? 3008 to 3003. Sounds familiar, right? Those are that's the value area, or the area where the market balanced out overnight and built a nice fat profile right there. That is the low volume zone from the news drop on Friday, and we are just balancing right in the middle of that. So we are stuck in between this well-traded area and this well-traded area above. So the question becomes, do we open, test up, and then fall back into the 3000 and below, or do we open, test down, find our buyers, push into 3008, and then take out the overnight high, giving us a target of 3015, 3016. It is really an equal shot. So I'm going to draw just one, it's the same possibility. An open auction, because we are imbalanced in the overnight session. The expected action is a responsive selling spree down to 3,000, test is 3,000, maybe 29.98, come back up above and finish somewhere in here with a low volatility kind of day for scenario one. I'm if we get more than 12, 13 points of range in the day session, I would be pleasantly surprised. But expect balance today. The secondary is just the opposite. An open auction that is initiative in nature goes into 3008, pushes above, consolidates 3008, pushes above, gets up into the overnight high or so, and then comes back in and probably finishes inside of the 3008 or back down to 3005 to set us up for a move the next day. So I'm expecting overall, I'm expecting balance in the day session by the end of the day. Now, if it does push, if it does move away, then that's great. It just tells us that more people are likely to be wrong, that this balance is wrong, and it's got the fuel in it potentially to have a good move. So I'm not married or attached or committed to either one of these scenarios. In fact, I'm not committed to any scenario at all. The scenarios simply give me an idea or let me brainstorm what's expected, what's most expected in terms of most likely, second most likely, third most likely, fourth most likely, and fifth most likely. Every day there are at least 5 scenarios. But what it does, and that's what I'm looking for. What areas are important? This 15, 16 area is important. And then below us, we have 3,000 again. And then below that, 29.95 and potentially 29.98 around the point of control of the prior day, 29.97, 29.98. Otherwise, it's a free for all here in the middle. It's kind of like just trading in the middle. Oh, 3008, expecting it to get tangled there a little bit as well. So just know that those are the key kind of areas, reference areas to watch, and pay attention to that. Good luck today, and I'll catch you tomorrow morning. Take care.